It's that time of year again. The forms pile up, the numbers swim before your eyes, and that familiar sense of dread begins to creep in. You work hard all year, you pay your bills on time, and yet, when you sit down to file your taxes, it feels like you're about to hand over a huge chunk of your earnings, with no real say in the matter. You follow the instructions, fill in the boxes, and hope for the best. But what if I told you that for millions of Americans, hoping for the best results in a significant financial loss every single year? What if the standard process most people follow is fundamentally flawed, leaving hundreds or even thousands of their own dollars on the table? This isn't a scare tactic. It's a widespread reality. The tax code is a complex beast, filled with rules and regulations that can feel overwhelming, but hidden within that complexity is a system of rewards, incentives, and benefits designed to help you. The problem is, no one is going to hand you a roadmap. You have to know where to look. The simple, unfortunate truth is this: most people overpay their taxes every single year, and it's not because they make too much money, or because they're chasing C or 9 y this bad. Why see what is 930 dur trider dine dari on to dine C or dine to see would cheat the system. It's because they miss out on perfectly legal, legitimate tax deductions they are fully entitled to take. Think of a deduction as a government-approved discount on your taxable income. For every dollar you can deduct, you lower the amount of income you have to pay taxes on. Overlooking these deductions is like walking into a store, seeing a 20% off sign, and still insisting on paying the full price. It just doesn't make sense. Yet that's what millions of us do, year after year, simply because we don't know what qualifies or how to claim it. We leave a trail of financial breadcrumbs for the government to sweep up, money that could have stayed right in our pockets. So, if you want to stop guessing and start strategically planning, if you want to keep more of your hard-earned money this year to pay down debt, save for the future, or simply enjoy the life you've worked for, then this video is for you. This isn't about finding shady loopholes or engaging in risky tax strategies. This is about understanding the rules of the game so you can play it correctly and confidently. Today, I'm going to demystify the world of tax deductions. I'll show you how to maximize them legally, step by step, in a way that anyone can understand. We're going to build your knowledge from the ground up, ensuring you feel empowered, not overwhelmed. We'll start with the absolute basics, defining what a deduction is and how it directly lowers your tax bill. Then, we'll uncover the most common and most costly missed deductions, from charitable contributions you didn't realize you could claim, to powerful health and childcare savings. For the millions of people now working from home, we'll do a deep dive into the home office deduction, explaining the simplified and regular methods so you can choose what's best for you. We'll also break down how to turn your vehicle and travel expenses into significant tax savings. And crucially, I'll show you a simple, foolproof system for documenting everything so you have organized proof at your fingertips, giving you complete peace of mind. By the end of this video, you won't just be a taxpayer, you'll be an informed, strategic filer who is in control of their finances. Let's get started on the path to keeping more of what you earn. A tax deduction reduces your taxable income. That means, less income taxed, lower tax bill, more money stays with you. The key is knowing what qualifies, how to document it, and how to report it correctly according to Internal Revenue Service rules. When tax season arrives, it's easy to feel like you're just trying to get it over with. But in the rush, countless people, especially freelancers and small business owners, leave a significant amount of money on the table. Why? Because they overlook common, completely legitimate tax deductions that could lower their taxable income and, consequently, the amount of tax they owe. Think of a deduction as a qualified expense that the IRS allows you to subtract from your adjusted gross income, or AGI. The lower your AGI, the less you're taxed. It's that simple. But knowing which expenses qualify is the real challenge. Many taxpayers, particularly those new to earning income outside of a traditional W-2 job, simply don't realize the breadth of expenses they can claim. They might think deductions are only for big corporations or are too complicated to track. The truth is, with a little knowledge and organization, you can unlock substantial savings. Let's walk through some of the most frequently missed deductions that you should be aware of. paying your fair share of taxes is your duty, but overpaying is not. So, let's dive into the deductions that many taxpayers forget, starting with the ones most relevant to anyone who is self-employed. First up, job-related expenses. If you're self-employed, this category is huge. It's not just about physical materials or inventory. Think about the software subscriptions you need, like design tools or accounting programs. Consider professional association dues, fees for industry conferences, or subscriptions to trade journals that keep you current in your field. These are all ordinary and necessary costs of doing business, and they are generally deductible. Next is the home office deduction. This is a classic, but many are afraid to take it, fearing it's an audit flag. As long as you meet the requirements, you should claim it. The key is that a portion of your home must be used for your business. This could be a spare room or even a specific sectioned off area of a larger room. You can then deduct a percentage of your home expenses, like mortgage interest, rent, insurance, and utilities, based on the square footage of your office space. Similarly, don't forget about your internet and phone bills. If you use your personal cell phone or home internet for work, you can deduct the business use percentage. While you can't deduct your entire bill if you also use it for personal reasons, you can make a reasonable estimate of how much usage is dedicated to your business and deduct that portion. Mileage for business or gig work is another big one. Driving to meet clients, picking up supplies, or making deliveries for a food app all counts. You can use the standard mileage rate set by the IRS, which is a simple cents per mile calculation, or you can track your actual vehicle expenses. Either way, you must keep a detailed log of your business trips, including dates, mileage, and purpose. What about education and training related to your job? If you take a course or workshop to maintain or improve the skills required for your current work, the costs can be deductible. This doesn't apply to education that would qualify you for a new career, but for ongoing professional development, it's a valuable deduction. Beyond business, don't forget charitable contributions. If you itemize, you can deduct donations made to qualified organizations. This includes cash, but also the fair market value of goods like clothing or furniture. Always get a receipt. Contributions to a health savings account, or HSA, are also deductible. This is a fantastic way to save for medical expenses with a triple tax advantage. The contributions are tax deductible, the funds grow tax-free, and withdrawals for qualified medical expenses are also tax-free. Finally, while it's technically a credit, not a deduction, the Child Independent Care Credit is too important to miss. If you paid for childcare so you could work or look for work, you might be able to claim a credit for a percentage of those expenses. If you earn any money outside a W-2, even part-time, you may qualify for far more deductions than you think. The key is to be diligent about tracking your expenses throughout the year, not just scrambling in April. If you work from home and use part of your space regularly and exclusively for work, you may deduct a portion of rent or mortgage interest, utilities, home insurance, repairs. This deduction alone can save thousands when done correctly. If you drive for work, business, or gig income, you may deduct mileage, gas, maintenance, insurance, parking, and tolls. The key is tracking. Without records, deductions don't count, even if they're legitimate. You may deduct or receive credits for contribution interface with confirmation dialog on laptop screen. Contributing to retirement doesn't just help your future, it can lower your taxes today. Documentation is everything. The biggest mistake people make is poor documentation. Always keep receipts, bank statements, mileage logs, and invoices. A deduction without proof is a risk, not a strategy. Smart tax planning is about accuracy, not shortcuts. Alright, let's bring it all together. To truly maximize your tax deductions this year and approach tax season with confidence instead of confusion, it's all about being proactive and organized. We've covered a lot of ground, so let's quickly recap the essential steps that will put you in the best possible position. First, remember the fundamental principle. Deductions lower your taxable income, which in turn reduces the amount of tax you owe. It's not about finding shady loopholes. It's about understanding the legitimate expenses the tax code allows you to claim. We talked about those often overlooked deductions, like non-cash charitable contributions, contributions to your health savings account or HSA, and even the costs associated with childcare that enable you to work. Don't leave that money on the table. Second, for those of you working from home, evaluate both the simplified and the regular methods for the home office deduction. The simplified method is straightforward, but if you have significant expenses, the regular method, while requiring more detailed records, could yield a much larger deduction. The key is to choose the one that benefits you most. Third, document everything meticulously. This is non-negotiable. For vehicle and travel expenses, a contemporaneous mileage log is your best friend. Whether you use an app or a simple notebook, record your business trips as they happen. For all other expenses, create a simple system. Digital folders, a dedicated email for receipts, or a physical filing system, whatever works for you. Consistent, organized record-keeping is the bedrock of a stress-free, audit-proof tax filing. Now, it's incredibly important that I add a gentle disclaimer here. This video is intended to provide helpful information and guidance, but it is not a substitute for professional tax advice. Tax laws are complex, and your personal situation is unique. I strongly encourage you to consult with a qualified tax professional or CPA who can provide advice tailored specifically to your circumstances. Ultimately, taxes don't have to be a source of stress when you understand the rules and prepare accordingly. Taking the time to learn and organize now will pay dividends, literally. If this video helped clarify things for you, please give it a like. It really helps the channel reach more people. Subscribe and turn on notifications so you don't miss our future guides on mastering your money. And finally, share this video with a friend, a family member, or a fellow freelancer who you know wants to save money legally. Let me know in the comments which deduction you found most surprising or helpful. Thank you so much for watching. I'll see you in the next video.